Yo, 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 yo. 200 people, guys. We need to pack this out. We need to pack this call out. You know, let me see if the chat box is open up real quick. Let's go, guys. I don't know if you guys are excited enough. If you guys thought, that the last couple of sessions have been amazing. The first few days of the bootcamp have been amazing. First of all, blow out the chat box, but second of all, prepare yourselves. These next 2 days, especially today, especially tomorrow, are going to be ridiculous, mate. They're going to be so ridiculous. I'm surprised it's not packed out right now. I'm genuinely surprised that the call's not maxed out. Go back to your group chats. This is the whole TE. This is for all of IM. Share this boot camp. Let's pack it out. This is a lot of the concepts that you've seen so far. Some of the basic institutional concepts, some of the Wyckoff concepts, some of the time frame. The way the markets are fractal. All that stuff is going to get put together in the next couple of days. Today you're going to get shown by some of the best in the business. By one of the most lethal teams in the business. You're going to get shown how to put that thing together. So guys, please, let's pack this call out. It's almost disrespectful that you guys haven't matched this call out yet. 1 minute till 10. 10 p.m. is when the call's going to drop everywhere. Everyone's going to hop on. Let's make sure that all of our teams are hopped on. These boot camps, they don't just come around every once in a while. But guys, I'm going to give you guys a few minutes. To. Oh, please don't cross with me. No, guys, I'm going to give you guys a few minutes to, pack out this call, and then we're going to get started right away. Yo, guys, for 400 participants, let's run it up. This should be minimum 1K. For the value that's going to get dropped today, this should be minimum 1K participants right now. I'm going to go share this to my group chats right now. You guys go do the same. This call is about to be Amazing, guys. You know what we're gonna do? We're gonna give it 2 more minutes. We're gonna get started at 5 past. We're gonna have a couple of announcements. We're gonna just get this thing started at 5 past. Yeah, make sure you got your notepads, everything ready. You know, take notes. One thing I want to say real quick, is, out of respect for people teaching, please don't, try and screen record the whole thing or screenshot everything kind of thing. Take notes. That's the real best way to understand it. Is take notes, write it down, understand it yourself. And yeah, guys, you don't need to screenshot things to share it later. Just pack this call out right now. Get everyone on this call right now, and yeah, we'll run it up. This should hit 750 real quick. We should max this out before we get started as well. Amazing, guys. It's 5 past. We're 638 participants deep. The chat box is blowing up, guys. Let's not spam. Let's not spam nothing too crazy. But yeah, okay. As soon as I say that, someone spams once, it's best. Guys, it's super amazing that everyone's excited. Yeah, everyone's super excited for this call. Before we start, before we really get into all the education and into all the content, I'm gonna bring up someone. Someone a lot of you guys know. He probably stole your pips, whatever it is. He's actually gonna come through and drop some major announcements, really, really important announcements, for some of the things for the rest of the boot camp and some of the things, just going forward. So, Mohammed, my bro, I'm gonna unmute you, or you can unmute yourself. I think you raised your hand. Yeah, let me unmute you, bro. And maybe Farhan or someone want to share their screen, and yeah, you can make your announcements, bro.
Thank you so much for that, bro. And I'm not gonna lie, there's only close to 700 people on this call. And you know when we say save the best for last, that's exactly what we've done with this boot camp. And this is because I was anticipating that the first day is gonna get maxed out. Next day, it got maxed out, but a bit slower. Next day, we had 850 people on the call. Today, we've got close to 700 people on the call. And this is what I was anticipating. So I said, let's save the best topics to go over for last. So that's why the real source is going to be dropped today. And of course, tomorrow we've got the special guest jumping on with a special source. So those of you who are on this call, get ready for complete madness. And a few announcements that I have to make before we actually get started, guys. Please stop spamming the chat because the chat is due to be spammed after I make these announcements here. So let me just pull up what I had for the announcements once again. All right, so last day of boot camp will be tomorrow. So today is basically the fourth day. We've got the four. We've had the four. We've had the three organizations so far, and the last day is today. We've got Wolfpack coming on themselves to completely shut it down, and then tomorrow we've got the last day, which will basically be of a special guest coming on to teach. Now, after this boot camp is over, it's not just that. Yeah, it's not just the boot camps are over and let's all just cancel everything and go back to normal. We've actually got a special Zoom lined up, probably for Sunday or probably during next week, which will be for the whole of Traders Empire and possibly even the whole of IM. Yeah. So the reasons why I'm making this announcement today is because we won't actually have the whole of Traders Empire on the call tomorrow. The whole of IM on the call tomorrow. It will only be for Traders Empire. Okay, so we've got a special Zoom coming up next week with, I don't even want to give it away, but it may be with one of the educators. It may be with some of the top geezers in IM. And obviously you can't see me, I'm not showing my face, but that's what we're going to have on the Zoom next week. So whoever's excited for that, drop some fire in the chat, drop some 111s in the chat, and then we'll save the best announcement for last. Yeah, you've all guessed who it is already because it kind of got baited out in the Smart Money chat earlier. But the best announcement for last, once I see some energy in the chat for this announcement, that's when I'm going to make it. All right, perfect. So let me just pull up the next announcement we've got, and hold on, I've just got to do something real quick to set it up. Perfect. So okay, cool. So basically this last announcement, and once again, best for last, we've got the last announcement. Shall I make it now, or shall I make this announcement once we've got 750 people on this call? If you guys are excited for it now, drop some 111s in the chat. Now. All right, calm. Let's go. So basically, when we actually put this bootcamp together, we did say it's presented to you by TE Sniping Prodigies, simply because that's the name which we've put together of this collaboration. So it's not only a bootcamp, it's a collaboration where the bank, where Smart Money, where Market Destroyers and Wolfpack have all come together to collaborate, and we will be moving as a pack. So I'm not saying that as a pun because it's Wolfpack's day, but we will all be moving as a pack, and from here onwards, we are collaborating. And let me just share my screen to show you guys the power of this. Over here, we've got Wolfpack, we've got the bank, we've got Smart Money, we've got Market Destroyers all combined. We're all in TE, and we have made a Telegram channel which will be open to everyone in IM, which will be run by all of us. So all of us organizations have come together to create one Telegram channel. Can you guys just imagine the amount of value that will be dropped in that channel? The amount of knowledge that will be dropped in that channel? The amount of impact we will create globally and worldwide that will have a great impact on our trading games. Who's excited for that? Who wants me to drop the link in the chat? Come on, let's find out who wants this link in the chat. So do you mind to actually let me just reclaim host so that I can close off the chat so people won't spam it whilst I drop the link. Let me just reclaim the host real quick. Oh, my Zoom's frozen. So if you want to just pass host over to me.
All right, bro, give me 2 seconds. Let me... make you host for 2 secs. Yo, Slightly, bro, you know, I'm slightly thinking you should drop it at the end. Just drop it at the end of the call. Just drop a link at the end of the call, bro.
All right, that's calm.
No, it's cool.
Whatever you think. All right, so guys, that's the announcements from me, and stay all the way until the end of the call. So obviously, gain the value from Wolfpack for the topics that are going to be covered. Actually, I won't even mention them. I'll leave that for the host. But these topics are going to take the trading game to a different level, and wait until the end of the until the end of the day for the link to that channel. Yeah. Take care, guys. Back over to you, my friend.
Yo, thanks for having me, bro. You know, I understand the power of this, you know, these announcements. You know, obviously the first one being we're gonna have a crazy special Zoom, and obviously we've got crazy special guests on call tomorrow. But I understand this, you know, this is a collaboration. Some people that I look up to, a lot of these people, market destroyers, smart money, and Wolfpack. They're people that I learn a lot from, and the fact that we're all gonna come together and produce this Telegram channel just to kind of share value with everyone. I don't know. For me, it kind of gasses me. So I hope you guys are super excited for that. And not that there's any reason for you guys to hop off the call at any point. I can't stress enough. I genuinely think this is going to be the best day. I think it'll be the best day of the boot camp, and we haven't even kicked off yet. I've had a sneak peek. I've had a sneak peek of some of the content that's going to be dropped. Some of the content that's going to be dropped, and I've heard through the grapevines some of the things that are going, some of the fire that's going to get dropped on this call, and like this is your last chance to grab your notepads and grab all your team members. If you're actually doing your team a disservice by not giving them the opportunity to hop on this call. Let's pack out this call. Where we are right now in terms of participants, 750 participants right now. Bro, we need to max out this call. We have Wolfpack Investments coming on to shut down this call, guys. We need to pack out this call. But I'm not going to delay it too much longer. I hope all the announcements make sense. Everyone make sure they're fully plugged into this call. If you've got any phones or TV or whatever is going on in the background, turn that off. Put your phone away. Don't text no one. That's it. Plug in, lock in, focus on the stuff that's about to get dropped. This is gonna be 1 hour of your time. That can put your whole year ahead in your trading game if you apply these things properly. So, guys, without too much further introduction, today, this evening, in this fourth session, whichever day it is of the bootcamp, you're about to get the clinical, the technical side, where we actually start to piece together, where the picture starts to form, where you learn a little bit about entries, about your mindset. I'll let the Wolfpack themselves go into mad detail in terms of all stuff's going to get broken down, but use this time wisely. The Wolfpack, we all know, we all see from social media, through their Telegram, just by the weight, their phones are heavier based on the size of their trading accounts. It's just crazy, the things that they're doing. But please make sure that everyone's plugged in. I'm gonna switch off this chat box real quick, and I'll open it up. I'll open the chat box up later on if you guys. I'll do that in a sec. Once you guys, if you have some more questions later on, but guys, without further ado, let's all stay plugged in. Farhan, bro, I'm gonna let you share your screen, and Siamo, I'm just gonna unmute you, bro, and you guys can crack on. Just give me 2 sets, guys. My Zoom's bugging out with their participants. But give me 2 seconds. I'm gonna let you guys crack on. Siamo, I'll mute you, bro. And Farhan, you should be able to share your screen as well, bro.
Yo, can you guys hear me? Can you hear me, bro?
Yeah, we can hear you, bro. We can hear you.
Oh, good. All right, for those of you that don't know me, my name is Siamo, aka Chami the Pips. I'm part of Wolfpack Investments. I've been in IM for approximately about a year. Just over a year, actually. Yeah, just over a year. I got introduced into institutional trading approximately in September last year, actually. Yeah. Guys, I just want to say, make sure you all stay on this call. We got a mad giveaway for you lot. I promise you we have a mad giveaway and you do not want to miss this. It's going to be announced right at the end of this call. Make sure you stay on this call. Right. Whoever's pumped up for this call right now, I want to see so much wolf emojis in the chat right now. Go on, make it pop. Come on, keep it going. That's it. Yeah, I could see. I'm liking it. Just let you know, guys, I'm on the motorway. I'm parked up in a service right now, and I just pulled in just so I can do this call with you guys, really. And I'm going to go through it all, and I'm going to teach you guys. So, I'm ready. Are you guys ready? Let's go. Right, I'm just going to turn my camera off because I'd look quite mad right now. But thanks, lad. Fine, bro, if you just don't mind going to the next slide. All right, so what I'm going to teach you guys today is seasonality. Now, seasonality is a big thing in trading, in my opinion. It's a confirmation that I use quite a bit. Now, what is seasonality, right? So forex seasonality is basically used when currencies make quite a similar move in a certain direction over several years, right? Literally, it's gathered from the last 20 years. So imagine the last 20 years, this information has been gathered together from January to December every single year. And they look at the average, and the average is taken. It's personally, the reason why seasonality is such a good thing is because it helps you with long-term investments, long-term investment types, basically. So swing trades, for example, gives you quite a good entry point, you know, for the long-term swing trade. This is how you catch your big moves. And yeah, so sorry, boy, I can't even think. It's my first big call, guys. Allow me. But yeah, so how many people have we got on this call? Nearly 800. Whoa. All right. So yeah, just to say there's a lot of evidence given, you know, to show that currency tend to follow a certain particular pattern, basically. So literally with all that evidence, you can use that. So you look at a certain chart, for example, which we will show you in a minute, and you can use that as an example. Fine, if you just go for the next slide for me, bro. Right, so here we got, right, the GBP seasonality. Right, and this basically is the chart that's been there for about the last 20 years, right? This chart is an average on the last 20 years. Now, I want you guys to look, yeah, at the highlighted box from, I believe, the start of February, dropping all the way down to the, I believe, like 2nd or 3rd week of March. If you look at it, you can see the biggest drop. You can see a big downfall with the arrow going down. Now, that's where it's a big fall, basically. Now, due to drop. So, does that happen in the next question? So let's take a look. Fine, if you go next slide for me. Look at that. This is GBP USD in February, March 2017. You could see from the high over there, it had dropped all the way down to the bottom. You could see how the market has fallen. And then when it comes to April, as you saw on the previous slide, it started buying up again. And look what happened right at the end of the highlight box. That happened. It just shot up again, just as the seasonality said. Now again, fine, bro. Next slide, please. Again, now we have GBP USD. This is in February, March 2018. What we said before in the chart, you can see the drop. Now look at it again. On the highlight box, you can see the big drop again going down. As we come to April again, we're starting to go up. This happens all quite a lot of the time. You can see this is 2 years in a row now. 2 years in a row. I mean, surely the markets are fixed. I'm 100% sure the markets are great. Is it lagging? Okay. If it's lagging, you might wanna turn the chat off, if you don't mind. I don't even go in the chat right now. I'm gonna go. Oh, you are lagged out. Yeah, black belt. The Whoa, whoa, whoa. Okay. Okay, guys, can you still hear me? Not too sure. 2 seconds. There we go. Yeah.
Yo, can you hear me? All right, guys, he's in the middle of a motorway. Jumped off at a service. I think that's why. Yo, can everyone hear me? Can everyone hear me? Can you just let me know if you can hear me? Our chat box is off, innit? All right, cool. Thank you, Naim, bro. Thank you. All right. So Siamo left off where he didn't leave off. All right. So we looked at GBP USD seasonality for 2017 market from Feb through to March. And you've seen how the market has fallen. Then as April comes in, the market starts buying again. Here we have 2018 again, GBP USD. Once again, can you see how the market, this is exactly from February through to March. Can you see how the market has dropped, right? And then come through to April, it continues to start buying. And then again, 2019, exactly the same thing. And then finally on GBP USD, we have 2020 March of this year, the same month COVID-19 shook the entire earth, right? Makes you question, is it a real disease that managed to coincidentally fall during the time GBP is expected to drop? It shows there has to be, something behind it. Something somewhere had to happen for COVID-19 to happen for people to make a lot of money, right? And then we move on to the next. Here's an example of gold. It's not just GBP. Here we have the average price of gold for the last 20 years. As you can see, for the most parts of the year, gold is bullish and rising, right? But let's focus on where price has been highlighted. You can see a rise in the new year going into February, right? Before a slight drop. And why does it do that? Why does gold increase in value coming into the month of February? And the simple answer is because of Valentine's Day. Valentine's Day is it's a celebration season around the world, where people are giving their partners gifts of jewelry, etc. And gold is used generally to make jewelry. So it can be a big factor in terms of finding trades. So let's have a look at gold examples, right? Gold, you see on the chart itself, 2017, look what happens. Gold through New Year into February, price is bullish before a bearish move starts happening in March. You see that? Again, we move to 2018, gold bullish, then in March, gold starts dropping slightly, right? Once again, we look at the price in 2019. You can see for yourself within that sort of area, price is overall bullish, right? At this point, you're probably like, wow, price moves in, usually the same direction at each time of the same year. And then lastly, we have gold for this year. And what do you see, right? The same pattern as the previous sort of 3-4 years of price I've shown you, right? Heading up from New Year into February to then drop in March. Seasonality, you have to understand, seasonality can be very helpful, right? Especially if you're trading in terms of an institutional trader or as an investor, but it's not just a tool that you use by itself. It should be combined with analysis as confirmation to determine your entry and exit point for a trade, right? It provides us with areas to look at to see if there is any potential price reversals in the market and allows you to have more confidence in trades when you actually see price reversals when seasonality sort of also indicates it, right? It's always more important to keep overall market structure in consideration, right? Don't just look at seasonality and think, oh, you know what? Seasonality says that gold is going to buy, I'm going to buy. No, remember, you have to go in with analysis regardless, and always remember market structure is the priority, right? If you see a bearish market reverse into, let's say, a bullish market, according to seasonal low points, to help you understand something, you can then go in for a buy. You can then start looking for a buy, right? In a downtrending market, vice versa, use seasonal high points to then find a reversal for a sell maybe, right? Seasonality is not something that's always reflected on all currencies. Seasonality is just an average of price. It's not an entire rule or strategy within itself, but there's massive benefits to seasonality if you utilize it in a correct way, especially with the sort of style of trading we focused on this week, smart money institutional concepts, right? if you apply seasonality correctly, you maybe apply it along with Wyckoff, for example, right? All of these concepts, you can find the big benefits to it, right? For an example, as an investor, let's say you're looking to invest, in January, and you can see on gold that January your investment will increase throughout the whole year. You can use seasonality alongside other confirmations and factors to go in for long-term investments, right? It builds up price movements, news, and let's say holidays and stuff like that. Also, so it helps understand the price of direction, makes it a lot easier. But seasonality is not something, there's too much detail we can put into it. Guys, we're about to, 1 second. All right, cool. So we're going to go into lower time frame entries, and we have probably one of the best of the best who's going to cover it with you, right? Now, Evan, JP Morgan is what I like to call him. He is a beast when it comes to the charts. Lower time frame entries, he's on another level, right? He finds the tightest stop losses to maximize his profit, which then leads to some crazy risk to reward ratios, right? We will sort of briefly cover with you how you can get lower time frame entries into a potentially swing type of move, right? You can have risk to rewards of like 1 to 50, 1 to 20, whatever it may be. Evan's going to come on right now to go for that with you. So I'm going to stop sharing my screen. Makan, I don't know if you still host, bro. When you're ready, bro, let's bring this beast on. Bro, let's bring this beast on whenever. Yeah, he's still host. Bro, can you hear me? Yo, are you there, bro? Is the bank there?
So he did say that he's going to get a drink, I guess.
Oh, okay, cool, bro. But yeah, bro, whenever you're ready, if you just want to hand it over to Evan, there you go. All right, Evan, I'm going to mute myself, bro. When you're ready, I've stopped sharing. Let's go, bro. Lower time frame entries. Let's show the source.
Yeah, can you hear me? Can you hear me? Oh, you are. I'll just have to show my screen. Nice. Oh, can you see my screen?
Yep, it's perfect.
Nice. Right, I'll start from the beginning. So yeah, all the introductions have been done brilliantly by the other guys, and we'll just quickly go into lower time frame sort of analysis and how it plays from the higher time frames. So hopefully you guys can be able to see this slide, and this is just the I left the little times at the top here as well, and this is the daily time frame. So you're never gonna place trades on the daily time frame, but you can always use it as a sort of guide to where price is going to be going next. So as you can see, I've marked my lower highs and lower lows, and then we've got our liquidity at the top here, and then we've got our liquidity capture as well, and this is on the daily, remember, so we're not going to be taking any entries. But yeah, we did create another lower low, which to me, that sort of indicates that we're still not entirely done with our downwards pressure. And even if we were done with the downwards pressure, we still have to pull back to then take the trade even further up. So we'll go on to the next one. That was the daily. Jumping on the 4 hours, you can see I highlighted my little box from the last buy to sell candle. And as you can lower the time frames, you can sort of see, obviously this is a distribution play now, and this is sort of where lower time frames come into the frame. Basically, you'll be able to see this throughout the entirety of the market. You'll be able to see pretty much this exact screenshot throughout anywhere in the market, and you'll be able to see as we go down to the lower time frames that this is the case. So we got our little distribution play now, but what we're missing at the moment is our obviously our second test, so our last test of support. this is on the 4 hour again. I don't like to take my trades off the 4 hour, and I'll show you later on why I don't like taking trades off the 4 hour. Do a little comparison between sort of my trades and a typical 4 hour trade. But yeah, this is the 2 minute time frame. So from the 4 hour time frame, we've zoomed in quite a lot. And as you can see, if you can see my mouse, we've got a little imbalance here. I forgot to mark it on the chart because I'm stupid. But we've got a little imbalance here, and then we've got a candle as well. An up candle again before a down move. This up candle, I can't see my mouse. This up candle was the candle that formed the move down to create our break of structure. So we know that we've moved, we've shifted our momentum, and we're now looking for sells. So this is my confirmation for getting sells in, is waiting for that break of structure, and you'll see on all time frames that it's going to be exactly the same. So we move down to the 2 minute, and as you can see, our little line here is the 4 hour imbalance fill that I was speaking about. I forgot to put it in, I'm not sure why, but as you can see leading up to it, we're building our liquidity up. We're building highs, we're building lows, just for institutions and the big players in the market to basically lick their lips and get their entries in and stop everyone out. I know this is the 2 minute time frame, but it's pretty much exactly the same you just saw on the last one. We've got liquidity built to the upside. We've got our up thrust or our UTAD, our break of structure, and then our test. And this is where I would take my entry from on the lower time frames. This is the 2 minute time frame we're talking about, not the 1 hour or the 4 hour. This is the 2 minute time frame. And I've decided that the 2 minute time frame was sort of the best time frame, because looking at like you can look at the 1 minute, the 2 minute, 3 minute, 4 minute, 5 minute, and they're the time frames where I like to take my entries off. It's pretty much clear to see that the risk reward drops dramatically, and if I go on to the next one, you can see this trade was taken with a 2 pip stop loss. Only 2 pips. Euro USD, if you're with the IC Markets broker, the spreads for Euro USD are very, very low. So you can pull off a trade like this. This trade was 2 pip stop loss. You could have taken TP at the last low, but this is just a sort of a running total of the whole trade. And this trade ended up being a 1 to 89. And if we go back to this is the area where we took our entry off. If we move there, you can see the marking still drawn out. This is where we took our entry off. But that was just Euro USD. I'll go on to another chart, and this is where I'll start sort of giving you options of what you can do. So I marked it out, and I saw that this is on the weekly time frame now on the Australian dollar and the Swiss franc. And this is on the weekly time frame now, so I'm never going to take a trade off the weekly time frame. You can see it's respecting structure. We didn't create a higher high, and we're sort of pulling back at the moment as well. So we drop down to the 4 hour. You can see again we're still respecting our. We broke our structure here, so we're in a downtrend and we keep going down, but we haven't made our lower low. But as we go down, we're still on the 4 hour. And if we drop down to the 15 minute now, this is where sort of you can start to see structure a bit more clearly. And you can see we consolidated quite a bit here after our down move. And this was the candle that is my point of interest. This is what I would look for. Again, it's the candle that the last buy to sell candle in this. I chose two sells for some reason. This was my last buy to sell candle that created the next low, which is down here. So this was my point of interest, and obviously I don't like taking trades off too high of a time frame, and people look at the 15-minute, they look at the lower time frames, they say, oh, that's just noise. They say, oh, Evan, like, what are you doing trading the 5 minute, and less than 5 minute? I've taken trades off the 30-second, the 15-second time frames as well. But I'm just using these as examples because I thought they were quite nice to sort of show you guys. But this is our point of interest. As you can see, we got it in our box. And this is just a zoomed in version of our box. So this is the 3-minute time frame. I've already marked out the 15-minute open of the candle. And we've got this huge imbalance here again. And this is what you go into, this is what you're going to find on the lower time frames. You're going to find these different points of interest, different candles that haven't been mitigated out of, imbalances that need to be filled. On the way on, in an example like this, you can see liquidity above here, liquidity that needs to be taken out before price creates the next move. And this, like, I haven't really done this very well, but this is our 3-minute imbalance fill. And if we go on this, and this was our 3-minute, the bottom line was a 3-minute imbalance fill. This is what you would call a social media entry. This is the entry right at the top of the trend. I don't normally like to take social media entries. They look good. Well, the name says it all really. They look good on social media, but they're not the best in terms of keeping your account balance safe, because who knows, there could be another imbalance or another candle in this wick. So you never really know, which is why I've got an entry here. But if I go in, this second entry was the entry that I would take, because as you can see, we're in an uptrend. We've broken our last low that created the high. I know you guys in Wolfpack, you know I stress this a lot. Structure only changes once you've broke the low that created the highest high. And this was it. We broke structure, we came back, retested, and this was the entry that I would have taken. This was the optimal entry to keep your capital preserved, instead of just trying to pick a high or pick a low. You've seen the reaction take place, you've waited for that break of structure, and now you're able to react off that and then take the test. It's as simple as that. I know from what you guys have seen in the previous days that the majority, especially with Wyckoff Logic and Smart Money, that you take tests. You take tests off Wyckoff. You take tests off order blocks. This is exactly the same. You wait for a break of structure and take the test of the order block. As you can see, I've got my order block here on the 3-minute time frame. Another extra confirmation is that the order block creates a imbalance afterwards. I know if you've been on the Trade House course, they'll refer to it as a proof of purchase by the institutions. But yeah, this was the entry that I would have taken, and this was sort of a comparison between the entries that I would take against the entries, and this is comparing the 15-minute time frame to comparing the even less than 15-minute time frame. If you took this trade off the 15-minute time frame, your risk to reward, and this is where I'll go on to risk to reward, would be 1.82 risk to reward. So it's not what we look for in whenever we're trading institutionally or trading with Smart Money, etc. But you can see how much I've refined my entry and increased my risk to reward. I can now take 25 losses and win this one trade and still be in profit. I need you guys to think about it. Like, this is a no-brainer. I see so many people. I see so many people on social media, and I see so many people in various chats that I'm in. They still only take entries off the 1 hour. They still only take entries off the 4 hour. and even a daily, I've seen some people take entries off. But being able to scale your charts down to a lower time frame can really boost your account, even if you you're taking quite a few losses. Like, if you guys have known how many losses I've taken, I know you guys in the Wolfpack have, but one tip that I would give you to find these, one, never take social media entries, because you're never gonna sustain your account just on social media entries. And once you see an institutional candle, all you need to do is just break it down and identify the different points of interest within that candle. And then whether you've got TradingView Premium or TradingView Pro, set an alert. If you don't have TradingView Premium or TradingView Pro, download an app called Core Levels. It does exactly the same thing. You just put in a pair and then put the price in that you want it to alert you to once price reaches that area, and then just watch. That's all you got to do. Patience. The Forex market and the markets in general, they take money from the impatient and give it to the patient. That's all it is. And that's all you can see from what I've just broken down, is that I don't need to take entries. I don't need to see if I can pick highs and pick lows. As soon as I know that we're on the lower time frames, we're starting to break structure, we're reacting off order blocks, then that's my prime time to enter. And this is the Euro USD trade as well. This one was 25, nearly 26 to 1. And the Euro USD trade, obviously with a normal entry, the stop loss would have been too big anyway. It's nearly 60 pips, but that's above the previous high, which was the test. My mouse keeps going, but above the test. But as you can see, I've waited for price to react off the levels I'm looking at, or off a point of interest within the candle, or a fill of an imbalance. And all I've done is wait for price to break structure. I'm literally like a broken record on this call, guys. Literally all I'm saying is wait for break of structure, wait for the right opportunity to enter, and then enter. This one was an 88 to 1, nearly an 89 to 1 risk reward trade. It's not difficult. And really being able to bring this into your trading style, and being able to implement this correctly, is going to do your compounding plan wonders, which that was pretty much for what's it called, lower time frame entries. What I did want to go over is believe it's on here, is the compounding. I know a lot of people have seen this over and over again, but this is sort of the guide that you can take within Wolfpack, especially. I'm not sure if it's the same for the other teams, but we look for a minimum of 25% growth a week. Now you think that's quite a lot, especially going back to the retail trading days. That's quite a substantial growth for a week. But if you think about it, you need, I think it's about a 1 to 1.6 risk reward trade on 3% risk to reach this a day. That's all you need, a 1 to 1.6 with 3% risk to reach this target in a week. And if I scroll down, I know this is a guide. There's going to be weeks where you may lose money. There may be weeks where you surpass your target by hundreds of percent even. But use this as a guide. Like this is within a week, and as you can see, you start off, humble beginnings, and then as soon as you start progressing through the weeks, how long are you willing to put the time in to learn, put the time in to implement, and put the time into growing your account, even if it's from something as small as £100 or £50. Like you can reach the goals that you're looking for just from sticking to the plan and implementing what everyone in this bootcamp has been explaining and showing you guys. So yeah, this is 25% a week. I think this may be one of the Trade House guys' compound spreadsheets. But if I just keep scrolling down, the column B is the weeks, the column F is the weekly gain, and the first monetary column is the account value or the account size at the beginning of the week. So this is what you tend to be looking for when you're sort of going for these compounding, going through the compounding journey. But this is just with a 1 to 6, or no, a 1 to 1.6 risk to reward trade every day for 5 days a week. I've just shown you a 1 to 26 risk to reward trade, which would have given you what's one? I don't even know. My head's fried already. But it's just over 3/4 of your account back on that one trade if you risked 3% of your account. 3% is, we normally tend to look between 1 and 3% risk for our peers, but yeah, I've just shown you a 1 to 26 and a 1 to nearly 89. And if you think these aren't achievable just from putting in time, doing some back testing, and just understanding where prices reacted from, and then being able to identify the points of interest around the higher time frame plays of where price could react, then you're obviously going to be setting yourself up for obviously great things going forward. I know we've got quite a few new people on this call, so use this as motivation. Even a 50% return a week. This is only weeks. I believe it's a 1 to 3.4 risk to reward trade on 3% account risk a week, or a trade, sorry. And you can see the numbers are just flying up. And if you can consistently do this, and you'll get better as while time goes on. But yeah, it's literally all you have to do is follow what all the other hosts of these calls have been saying, all the other of the educators on Go Live saying, you'll be all good. But yeah, I think that's me done. I don't think I've missed anything. I hope you all have taken some good notes or anything to sort of jot your ideas down or memorize what I've said. But yeah, feel free to follow us on Instagram, shameless plug and all that. Our Telegram's there as well. We do give out some nice education based on the trades we take. But yeah, that's me done. I think we're going to be passing on to Farhan now. But I don't know whether one of the hosts wants to take it back before.
Yeah, no, Evan, bro, that was savage, man. That was flipping savage, man. Casual 1 to 89 like it was nothing. But yo, guys, that's crazy. You know, Evan's a very humble guy. You know, he don't really talk too much about profits, or he showed you. You know, he showed us the compound plan. You know, if he showed us, his compound plan, I think the numbers they're gonna look a bit crazy. It's gonna look a bit sick. You know, I've seen this guy. I've seen this guy drop crazy trade. 15-second, 5-second, 30-second trade. This guy's crazy. But the next speaker that we're gonna bring up, he's actually the leader of the Wolfpack, and you guys definitely know who he is. I'm gonna make him host so he can unmute himself and share his screen. But Farhan, my bro, I'll bring you up, and yeah, you can drop some fire, bro. Let me make you host on that.
Yo, bro, can you hear me?
Yo, I can hear you, bro, perfectly clear.
Oh, damn, one second.
No rush, bro, no rush.
My mouse is just bugging out. 1 second. Let me just share my screen.
No worries, bro. Yo, guys, I really want to open up a chat box, to
Oh,
so you guys can
Wait,
share
don't
your
open the
value.
chat box now, bro. My
Yeah, that's what
Zoom
I'm
is
saying.
about to crash.
Yeah, literally, man. I don't want to crash. I don't want to crash Zoom, man. The last time
Guys,
I
bear
was
with
on
me.
chat box, it crashed.
Actually, guys, before I share my screen, yeah, everyone turn your cameras on. And whoever's got their cameras on, just keep your camera on. And I want to see your face in the camera. We're going to do something to wake you all up. Oh, please, my Zoom, please don't crash. All right, cool. Can everyone see my screen at the same time? All right, do this. Guys, I can see you on camera, by the way. So if your camera's not on, I can see you all. Yeah, everyone do this, yeah? Everyone make a circle with your hand. All right, now slowly, 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 bring that circle towards your chin. All right, some coachable people, some smart people. I watch you go from there to there, from there to there. It's mad. All right, I'm going to stop my video. That's just something to sort of wake everyone up. Let me open up my notes. But yeah, 1 second. All right, guys, let's throw it up for, first of all, not just Evan and Siamo today. Let's throw it up for, who did we have on Monday? We had Ashwin and Ehsan go back to the basics on Monday. We had Makan and Kyle do a sick job on Tuesday, bro. Love to you guys as well. Yesterday, we had Mr. Steal Your Pips himself, you know, jumping on and showing you how to steal all the pips. I don't know if the chat box is open. And then today we had, you know, Siamo. Guys, show Siamo some love. You know, it was unfortunate that his connection was a bit messed up and he couldn't jump on board. But, you know, I had to come in like the super sub. Anthony Martial and that. And Evan, bro. By the way, guys, for Evan, right, that's the first time he's jumped on a call of this scale, right? The first ever time he's jumped on a call with more than 100 people on it. And you could tell that the guy's a natural. Like, he just came into it and literally showed a go. So love to you guys. But yo, family, I am family. What's good? Is the chat box open, bro? Actually, don't worry. It'll lag out, don't worry. You know, guys, I hope you're all well and good. I know it's getting late in the evening, so I won't keep you for long. Now, for those who don't know who I am, right, my name's Farhan, or you know me as the Wolf of Wales. I'm 25 years young, based in Cardiff, Wales, and I got started in IM Academy 20 months ago. And honestly, without sounding cheesy, right, it's been a life-changing experience. I currently hold the position of Platinum 1000, and over the last 20 months that I've been involved in the company, the trading knowledge I've actually gained through this platform has been crazy. Not just through the platform, but through my peers as well, you know, my mentors, everyone around me. You know, it's helped me to generally develop myself in all areas of life, even outside the world of Forex and network marketing, right? By picking up skills and allowing me to develop my mindset through it, right? Things like my sort of day-to-day confidence, belief in myself and my patience, you know, these are all sort of life skills that we need on a day-to-day basis, right? So my training today, right, is going to be based on the trader's mindset, right? This is probably the most important training of the whole week, because I'm going to cover where and how most people fail when it comes to trading, right? And how you as a person and an individual can overcome these stumbling blocks to take your trading game to the next level, right? Not only that, but to shift your mindset into thinking like an investor in the world of Forex, and how this can help your psychology, right? How you should trade strictly with your strategies and not with your feelings, right? That's why the training call is called today, Catch Pips, Not Feelings. Because being a trader is truly about not catching certain feelings to the market and catching pips to make money, right? Now, we've all heard the saying, note takers are the money makers. So I suggest everyone, you know, whether it's on your phone, your laptop, your pen and paper, whatever it may be, make sure you take notes, because this is the most critical part when it comes to trading, right? It's the most critical part when it comes to trading. Now, first things before we sort of dive into it is, what is trading psychology? Trading psychology refers to a trader's mindset during their time on the markets, right? It can be the sole reason as to why someone can secure some profit, or an explanation as to why a trader is making losses. Human emotions and characteristics play an important role in trading psychology. The main focus of learning about this today is to learn how you can channel these emotions and traits into your trading for positive impact, right? Profitable traders don't act upon negative emotions, because negative emotions are, you know, as it affects you with anything, it's going to affect you the same way in trading. Emotions such as anger, happiness, all of this stuff affects your trading. Whereas traits such as confidence, impatience, they can affect trading too. So there are many ways, before I get to that, actually, there's many people you see that, they're extremely intelligent. They've got this and that qualification, they've got, this and that knowledge, but still losing Forex, right? Because the emotions like greed, fear, and joy after a profit cloud their decision-making ability. When you don't know how to handle emotions, it can ruin your trading and cause damage to your trading account, potentially leading to you losing a huge amount of money, right? And we don't want to lose money in the market. We're here to make money. The reason is very simple. We as humans, we make irrational decisions when we're angry, depressed, or greedy, right? Do you see with those emotions, right? Those emotions are strictly emotions which are based on negative mindsets, right? So you should always trade with a clear mind. You should never go into trades with an emotion, right? If something has happened, let's say something has made you angry, do not go into the market. Sit back, clear your mind, and then go in with a fresh mind. Now, the biggest stumbling block and struggle, like I said, is psychology and mindset that's needed to actually back the skill, right? It's probably why, when you're having losses, most people have like that Drake Marvin types room in the shower because they, made losses and stuff. Mindset is the most important part when it comes to being a trader. So the first thing we have is the 80-20 rule. Anthony Robbins, one of the world's most famous mindset and development coaches, has applied the 80-20 rule to do with anything to do with success. He states that in almost every situation of success, 80% of success is due to psychology, which is the mindset, beliefs and emotions, and only 20% is due to strategy, right? The specific steps needed to accomplish a result, 80% comes from the mind, 20% comes from the skill. So how this is applied to trading, right? As a trader, you need to know how to analyze, read charts on TradingView, use MetaTrader 4, and whatever other skills are needed. Although these skills are obviously essential when it comes to being a trader, right? The rule would technically suggest that it's overall 20% of what is necessary to achieve the end result. Therefore, without the 80% of the proper psychology needed in place, the skill will be of limited use. It won't be of no use. It's going to be of very limited use, right? So skill set obviously is very important. It's what's going to actually lead you to achieving your goals. However, psychology is necessary to then sort of guide you towards pushing the actual skill of trading, right? Without this in place, the truth is the skill of trading will most likely stop you from moving forward to becoming a profitable trader. With the right psychology, your sort of chances of profit become greater. Traders focus with precision on the goal they wish to achieve, right? So as you've seen with Evan's compounding plan, that could be like a general goal you wish to achieve, or whether it be, to buy a car, whatever it may be. You focus with precision on the goal you want to achieve. You never let any negativity sort of defer you away from that, right? They learn to manage risk and overcome fear by controlling their focus. Although every trader will say that the ability to manage risk is the key to success, trading success is down to developing your psychology first, right? First, you focus on the skill, then the mindset to learn to manage the risk and to deal with the emotions to then better guarantee your trading success, right? Money management for me is a key thing, right? It falls massively into the psychology section because it's a part of learning how to be knowing and being able to control your mindset when it comes to things like greed, right? So alongside sort of focusing 80% psychology, same effort should be put sort of learning to manage your money and becoming disciplined. Then 20% on the skill, which could be analyzing charts and trading. If you do this consistently, you will start to see a massive positive change in your trading profits. I can guarantee that for you, right? Use an effective strategy that you understand. This takes up 20% of your mental energy used to actually find the trades. You can then focus the remainder to focus that 80%, which is on the mindset. A lot of traders never get this right. They jump from strategy to then another strategy, trying to find the perfect strategy for themselves, when the truth probably is it's not the strategy, right? Strategies work. They're strategies for a reason. It's just your mindset. It's not right. It's not the strategy doesn't work. It's that your head doesn't work, right? So you need to get your head in the game. It's like the High School Musical song, get your head in the game, blah, blah, whatever it goes. I don't know. I don't want to embarrass myself singing songs, actually. But risk management, right? Let's get into money management. Money management, risk management, I say are similar things, right? Pretty much the same thing. Risk management is, in the simplest explanation, is you identifying and accepting any sort of potential of losses within a trade and then taking that understanding into the trade to execute, right? Usually when we hear the word risk, naturally we think of it as, let's say, a negative type of thing, right? However, in the Forex world, especially if you think like an investor, having the idea of risk is almost necessary to generate profit for yourself, but also to helping you understand in how to control losing any money. To make a profit, you have to accept the potential of the risk being involved. Risk management, however, allows you to cut down your losses overall, right? It also helps you as a trader from losing all of your money at once, right? The risk is when you actually lose money in a trade. If you learn to manage that specific risk, you can learn how to eventually always be profitable in the market. Risk management is the most important part of trading, hands down. Without a doubt, most important part of trading. If you don't know how to manage risk and you make a lot of profit, let's say as your profits grow, so does your lot size, right? If you were to then take 1 or 2 bad trades, your account is potentially blown. It's at zero. Without risk management, you become greedy and you become a gambler, and you don't want to become a gambler in the market. Risk management doesn't always make you consistently profitable. It helps to control your emotions, stop you from becoming greedy, gives you confidence in your own trading plan, and just makes trading in general a lot more fun, right? Risk management leads to sort of massive long-term growth. Once again, as Evan showed us with the skill of compounding, the best traders include and understand risk management to simply stop losses from getting out of control. It's a way to preserve your capital and profit, including risk management in your trading plan to cut down losses, taking partial profits, stuff like adjusting stop losses. It's a very smart way to stay in the game for a long term, right? But not having risk management is why a lot of people come into the industry thinking that making money through trading is fast and easy, right? Only to get bullied by the markets into losing. The reality is that's your own fault. You can't just open a trade without taking into account how it will affect your trading capital. Without risk management, you do not have anything to manage your money and risk, right? If you do not learn how to sort of manage your risk, you're not a trader, you're just a gambler, okay? So now let's go into examples of risk management. Let's say you have, let's say you have 100 pounds. Actually, let's say you had 10,000 pounds, right? 10,000 pounds. You would not risk 50% on a trade, which is 5,000, half your capital, on one whole trade. That's basically saying 2 losses and your account is blown, right? So let's break it down. Let's say person A is to risk 50% of his balance on a trade. All of them have a capital of 100 pounds. Person B decides to risk 20% per trade, but then person C decides to risk 1%, right? Now, let's say their strategy, their wins are very low. Let's say their strategy only wins 3 out of every 10 trades to average, with an average of 1% risk and 5% reward. This is very easily achievable with the trading strategies we covered with you in the past few days. Now, check this, right? Person A, after 2 losses, blown account, money has gone. He's down to 0, right? He's crying Marvin's room in the shower. His money's gone, right? Person B, after 5 losses, loses again. Account has blown, money is gone. But then person C, after every trade and loss included, still 8% in profit. Person C is that person who loves risk management. Person C limited their risk to 1% and made sure that they will still have enough of a balance to trade with if things were not to go sort of in their direction according to their plan, right? A good and reasonable amount of risk per trade is 1 to 3%. You know, even if person C sort of decided to risk 3% per trade, right? Losing trades would equal to minus 21%, whereas the 3 trades would give him 45% profit. Overall, he would still be in 24% profit out of 7 trades losing. Do you see how risk management now allows you to win whilst losing more trades, right? Now you should see why thinking of percentages like an investor is more powerful. A lot of people say like, okay, pips are powerful, pips are powerful. Pips are powerful, yes, pips are a big thing, but for me personally, thinking like an investor and seeing the percentage gain from a trade is more powerful than a pip, right? Why would I look to catch 300 pips to gain 10% on my account when I can do that in 30, right? My team are just going crazy. Now chat box, sorry guys, I'm getting distracted. I'm going to put my phone to the side. Guys, lower it, yeah. But now you see why thinking of percentages like an investor is powerful. Greed and impatience cause A and B to lose, right? You need to learn to become like person C. New traders come into the market and they're usually like A and B. They want to dive in head first, enter in trades as quick as possible to make money as quick as possible. Although in the beginning this is very tempting, it's the reason why most lose. It goes back to what Evan covered once again regarding like risk to reward ratios. Risk to reward is simply the amount we can lose against the amount we are looking to win, right? If you're not making money and losing a lot, the simple and most effective answer is just learning and understanding risk management. With risk management, you learn how to handle not getting too greedy, and with risk to reward, you understand where to set your profits and losses. So in the certain area of the market, which helps to combat sort of your greed and discipline, right? You discipline yourself to the numbers according to your plan. All of this will build you long-term and sustainable wealth, right? Risk management, if you understand risk management and really perfect risk management itself by itself can build you long-term sustainable wealth. right? So the key risk management rules, what I say is invest money you don't need when it comes into actually opening a trading account. Is it might sound obvious, but the first rule is to only risk money you cannot afford to lose, right? Many traders skip this rule because they assume that it won't happen to them type of thing, right? If trading was gambling like at a casino, I don't gamble by the way, but I know how the concept works. People would not take all their money and just bet on black. Why? Because even gamblers understand risk management. No one does that. It's the same with trading. You don't take unnecessary risks by using money you need to live on. Why? Because it's possible to lose all of your trading capital. And secondly, because trading with funds you live on will add extra pressure and emotional stress to your trading. And it will then sort of compromise your decision-making abilities and increase the risk of and chances of making a mistake. Number two is think about your risk tolerance. Before you start to trade, you need to determine your risk tolerance depending on things like, it could be your age. Obviously, an 18-year-old might not have, 18-year-old might not have the same amount of money as a 23-year-old or 25-year-old. Your actual knowledge of Forex trading, your experience within the markets and the industry, how much you're willing to lose, and your investment goals. So this can be how much you're looking to make per day or how much you're looking to make back per week, whatever it may be. Knowing your risk tolerance, it's just not about helping you sleep better at night or have less trading stress, right? It's about knowing you have control of the situation because you're investing the right amount of money versus your personal financial situation in relation to your financial objectives, right? Keep your investing without your risk tolerance and you decrease the likelihood of overfunding your account. That's the truth. Number three, set risk to reward at minimum 1 to 5. If you've seen in the comments, Evan, right? Evan catches mad risk to rewards. This guy, if you catch anything below 1 to 10, he calls that cute. He calls that cute. That's why we say we start at 1 to 5 and we work up. A risk to reward ratio measures and compares the distance between your entry point and your stop loss and take profit orders, right? Knowing about risk to reward ratio, it will improve your chances of becoming seriously profitable in the long term, as Evan explained alongside compounding. Stay your stop losses and take profits to preserve and protect your capital. Number 4 is very simple. Control risk per trade. Again, do not risk more than 3% of your balance and understand you need to protect your money, right? And number 5 is keep your risk consistent. Most beginners will increase the size of their positions as soon as they're making profits, which is one of the best ways you can actually blow your account. So that's why keep your risk consistent. Just because you've made a few winning trades doesn't mean that the next one is going to be profitable. Do not become overconfident. It's the worst thing you can do, as that will lead you to changing your whole money and risk management rules without having solid reasons as to why you've done it, right? So these are generally the 5 steps I follow and I teach people to follow in establishing a successful trading method, risk management method. Now, all you need to do is stick to it and now follow to learn for an investment plan, right? Now, managing your trades. A Chinese military general famously once said, every battle is won before it is fought, right? Which is a powerful quote because it simply means the planning is why a war is won and not the war itself. Planning ahead can make all the difference in the world between success and failure, right? Now, apply that quote into trading. Remember, I said it, I'll say it again. Every battle is won before it is fought, right? Stop losses and take profit areas represent 2 key words, 2 key ways where you can actually plan ahead, right? Traders should always know when, by planning, so they should know when to plan and when to exit the trade before they've actually executed it, right? You're making your battle plan ahead of time, so you already know you've won the war. Now take into trading. You already, guys, my phone's blowing up. I beg you all concentrate. But what was I saying? I was saying, okay. So within trading, right, you're making a battle plan in terms of the trade. You're planning everything beforehand, right, to know and then go into the trade and win that trade, right? But not just that. Something I heavily emphasize on is a demo account. A demo account is how to become profitable before switching to a live account, right? The same quote applies to a demo account, especially when you manage and plan your trades. Practice everything on demo and remain on a demo as long as you possibly can. And I'll tell you why. It's demo account, right? A demo account can actually help with greed massively because you really learn to discipline yourself and get rid of the gambling aspect of things, right? It helps overcome things like fear of placing a trade, as you can build your confidence of your analysis, and you never ever would go into a trade without analysis after that. You have faith in it. Your analysis is like a navigation to a trade. When you don't know your way to a destination and you don't have navigation to that destination, you end up lost. Without planning a trade, chances are you're going to end up losing. And I'm telling you from experience, trading anxiety is a real thing. It's basically having the expectation of things going wrong, right? But have you seen with anxious people? Anxious people avoid whatever it is that makes them upset. That means that a trader may not make an obvious trade, or let's say hold on to a losing position too long. They become too nervous to trade according to their plan, right? And from then this affects their performance, which then affects their mindset. Let your trading plan override your anxiety. Let your trading plan override your trading stress. Just follow it. It's that simple. Practice for as long as you need, and then only move on to a live account when you're completely ready, right? A trading journal. Keep a track of every trade that you have for a trading journal, right? Plan your trades beforehand so you know exactly how much risks to sort of profit you can make or lose. A trading journal is a very good way to increase the skill set and gain confidence in actually taking the trade. Confidence being key in trading psychology, as everyone knows. Trading journals can help massively with trading psychology because you have sort of broken down the trade, and not just broken it down, understood all sort of every single one of the trades at the same time. That day, when going into the next trade, you've already gone past the emotional understanding of the previous trade, and now knowing how to combat these negative sort of emotions, you can enter the next trade with a lot more confidence. So to break it down, what is a trading journal? It's a place where you keep a track of all your trades. That's as simple as it is. Trades that you've taken, a place that you can look back on for future reference. It helps you to sort of track your progress through studying previous mistakes. In the long run, it can be a very strong foundation to learning how to execute better, whilst also building your confidence at the same time. So the benefits of a trading journal are there's a lot, right? It helps to develop your consistency and also make your strategy profitable. It builds the framework for your strategy. It helps you to learn how to manage emotional triggers. It helps you to define your own strengths and weaknesses, and it keeps you out of questionable trade ideas. So at the end of it all it does, it encourages performance-driven growth. And what goes into a trading journal? A trading journal, you can have things like the trade you've taken, execution type, entry point, exit point, date of the trade, the length of the trade if you've held it for a few hours or a few days, the result of the trade if it was a win or a loss, the reason behind every trade, which is the analysis, the strength and the weaknesses from the trade, and your thoughts and feelings towards trade and after trade. All the above, as you see on the screen, it allows you to sort of self-review yourself and give you self-review questions to then carry on to the next trade, right? Okay, FOMO, actually, before I get into that, with the trading journal, right, every successful trader not only examines each particular trade, but they also examine the progression of their trading performance. So through a trading journal, as a trader, you're able to sort of quicken the process towards a more disciplined and profitable trading career, right? By taking advantage of just the trading tool, you can literally put yourself months, years ahead of other people. Now, FOMO versus JOMO. JOMO is a new thing. And here's how one letter makes all the difference. JOMO is a real thing, by the way. It's a real thing out there. JOMO substitutes fear for joy, suggesting that not is it only okay to miss out, it's actually something to have joy in sometimes. The joy of missing out is as important of a concept for traders than anything else, right? It emphasizes how it's okay to take a step back to think, replan, and to try and enjoy trading rather than rushing into trades to miss out, right? FOMO means to fear missing out on a trade, literally what it says in the name. This could be a fear of missing a move in a market or having a lack of knowledge compared to others. As a result, FOMO traders can usually be sort of anxious and dissatisfied at themselves all the time, right? Say goodbye to FOMO and welcome in JOMO. It sounds weird to say JOMO. It's been described as a medicine to FOMO, right? It allows traders to be calm and disciplined, traits that are good for traders. A JOMO trader knows their own mind. They have a solid trading plan and they don't run after the markets. Instead, they wait for the opportunities that fit their strategy, whereas FOMO traders, on the other hand, are always feeling under pressure and in fear of missing opportunities. Now, guys, I'm going to fly through these last few slides. So here's the difference between a FOMO and a JOMO trader. A JOMO trader, essentially, you can take a screenshot of this. I'm happy for you to take a screenshot of this just as an example. They think differently to those driven by FOMO. So just take a screenshot of this, question yourself later, which trader's logic most likely resembles your own. And then attributes of a JOMO trader. So there's certain sort of distinct patterns in the behavior of the two types of traders, right? There are some attributes of a JOMO trader. Obviously, it's not just as simple as, you know, as I'm saying, it's going to be like, it's going to be easy. Like, you're going to not be confident. Like, you're not going to rush after trades and whatnot. In the real world, Forex traders can experience a roller coaster of emotions, fear, greed, anxiety, and many more. It can trigger easily, right? It can trigger by something in the charts or market being volatile. Many things can trigger it. FOMO, it can affect anyone. And if it doesn't, then you should sort of train, right? It can lead to your entire mindset to be negative. Every trader knows that there's always room for improvements. You should always be, as DJ Duncan used to say on the All Academy, always be a student to the markets. The skill of trading, then having the psychology at the same time, it doesn't come overnight. It's all an effort of knowledge compounded on top of each other to give you massive results over time in both your trading profits and with your trading psychology. So once again, I'm happy for you guys to screenshot this. Is what does the joy of missing out look like in trading? If it doesn't just appear, but it generally means to be calm and a confident trader who is happy with their own strategies. It's difficult to actually pinpoint a specific trading habit and understand how it impacts success as an individual, especially when sort of everyone is different to everyone else. But here, basically, I provided some scenarios and actions that you can take for yourself as a trader, depending on you know, if you're a formal trader or a Jomo trader, you can adjust over to it, right? Now, steps to becoming a Jomo trader. We are coming to an end, guys. I know it's been long, so just bear with me. We're about to finish off. So the very key important thing is understand psychology is the main part. That's the first step, right? Trading, right? We know why psychology is a big thing and how to overcome it, right? Develop a trading plan. Develop a trading plan. We know how important it is. How it helps to sort of become very disciplined and not overtrade. It stops you from gambling away at the markets, completely helps to remove fear as you learn from sort of previous mistakes and know what to do going forward. Use your resources. Once again, it helps you to become disciplined, allows you to understand, like, you can break down trades, you can take knowledge from everyone, always trade with analysis, always have a direction of how you want to take the trades, build your confidence and patience at the same time, improve psychology, watch mindset videos. Like, personal development is key, right? Have a healthy relationship with trading. Treat trading like it's your best friend. It's your best friend. I need to mention one person on Takir, right? He was a lawyer. He treated trading as his best friend. The guy's retired. I don't know how old you are, bro, but I know you're under 25. But before 25, he's retired because of the relationship he built with trading. The guy's a beast trader. Everyone loves his strategy, right? All the above will help you to improve your trading psychology. Excuse the spelling mistakes. Here's the steps, basically. Understand psychology, risk management, what it does for you, helps to manage greed and impatience. Planning trades helps to become disciplined, stops you from becoming a gambler, right? Removes fear, all the negative aspects. A trading journal helps discipline yourself also, builds confidence in your skills / sort of trading ability and strategy, and builds consistency. And we've covered how to turn your fear of missing out into the joy of missing out. And the most important part here, the most important part of the training tonight is do not give up. Some people, or most people, they see a few losses and just give up, right? Consistency with trading brings results. Understand that all it takes is consistency and a desire to follow the skill set. Kobe Bryant himself always used to say he wanted to become the best basketball player on planet Earth, which is a skill. But the only way he could do that is becoming better than he was yesterday. He used to outwork his potential. You need to outwork potential. As hard as you can believe you can work or sort of learn whatever it is, understand you can go harder. Reality is you're not getting results when you want to see it is because you are not putting in the same dedication and effort as you would do with your job, studies, etc. Right? Trading isn't just a thing. The more time you spend to better understand the skill, the more rewarding it will be. You need to keep learning, humble yourself to the markets, get into personal development massively, which will help you psychology. The best traders out there did not become the best by just simply being in the industry. It doesn't work like that. They put the work in. You need to not give up. It's that simple, right? Thomas Edison, the guy who created the light bulb, famously said, I have not failed. I have found 10,000 ways that will not work. Look at you and your trading knowledge. Can you say the same with that? Remember, quitters never win, winners never quit. Which one are you? Right? And that sort of cuts it off, guys. This is something personally from me and the guys between my team. So this is something that we're giving away to you. It's been an honor to actually jump on board and actually help to educate and provide value for a lot of people in the whole of IM. Like, I had never expected to have this opportunity and just a way to give back. This is something sort of small, and I didn't realize there's 685 now. but 1,000 people maxed out at the start. As through the week, these calls separate the winners from the losers, right? So what we've done is we're doing a giveaway and some one-to-one trading sessions on lower time frame entries. And how to enter is very simple. You follow the 3 Instagram accounts of the educators today, post a bootcamp story with tags, and message us with the name of your upline Platinum 1000 to avoid any dodgy business, basically. Mohammed's going to bully me about the date, but we're going to take all the names from the story mentions, and we're going to pick winners next Friday. So winners are going to pick next Friday. Initially, we plan to give out 2 £50 accounts, but I think that's going to be increased because of the amount of people that are on there. Right, we're probably going to increase that to a lot more trading accounts, and we're going to do like 3 or 4 maybe one-to-one trading sessions via Zoom, whether it be with yourself or with your team. It's just sort of something from us to you to say, you know, this is, we're in it for people, guys. Like, we didn't need to come on and drop this knowledge or help you to level up, but we took our time out to do that. But guys, can I make sure the chat box is unmuted, please? I don't know, am I the host? I am the host. All right, cool. Guys, okay, that wraps up day number 4 of the boot camp, right? And I don't want you to get off the call right now. The Wolfpack are, they're insisting that I howl like a wolf, but I'll do that in the group chat. But I don't want you to sort of leave the call now. Guys, if you've enjoyed and gained tons of value from the boot camp, I want you to understand this, is that take that value and put it into practice. Now, don't just take that value and leave it in your notebook. No, the notebook is there for a reason. You take that knowledge into your head and apply that knowledge into whatever you're going to apply it into, right? So apply everything you've learned, and I promise you, just with consistency, you're going to have results. And I'll tell you all these things from experience, is that I was once upon a time one of these people who never used to believe in trading. I came into trading, I didn't give it my all. Psychology be the most important part. I'm telling you, all of this training I put together has been based on personal experiences, right? Put it into practice, I promise you. Now, let me just check. I'm able to announce this.
Announce what?
Tomorrow.
Yeah, go on.
All right, guys. Okay, cool. All right, guys, this week has been sick, and tomorrow's about to be even better. There's going to be a different sort of sign-up process for tomorrow's call. But for everyone in IM, we appreciate you jumping on. Today will be the last day that you can jump on the boot camp. Tomorrow is going to be Traders Empire exclusive. Now, the person we're going to be learning from is actually my personal mentor. His name is Wally Khan. If you've heard of Wally Khan, let's drop some heat in the chat box, because you know the source is about to bring. The chat box crashed my phone. Minor. It's fine. I can't even view the chat box. But guys, tomorrow we have an 8-figure trader, a self-made 8-figure trader. And I don't want 8 figures to be the reason as to why you jump on. I want you to jump on based on the knowledge that he has, right? Based on the knowledge that he has gained, right? I could probably say, to me, he's probably the best trader in the UK by a mile in terms of the knowledge he has. And the things I can say about him are endless. The guy's the most humble, down-to-earth guy I know, and the amount of value he drops is ridiculous. Like, in terms of just psychology or just the actual skill set of trading. Guys, tomorrow's limited to 500 members. Wally the man himself will be jumping on for a session at 10 p.m. tomorrow. First come, first serve. These quotes have been packed out, and tomorrow most likely we'll pack out again. So whoever's in Traders Empire, do not share the link anywhere. This session will not be recorded as well. This will not be recorded, so you have to be on the session to make sure that you see it. Make sure at 10 p.m. or before 10 p.m. when the link is dropped, right, you're ready to go and get in, because I guarantee you this call will max out. Wally's about to come in tomorrow and drop some serious nuggets. That's our special guest, guys. But guys, once again, I thank you for letting me sort of jump on and educate you and provide you with some value. I hope everyone gained tons of value. I'll announce all of this on social media. But yeah, I'll hand it back to Mohammed and we'll take it from there. Love, guys.
Thank you so much for that. Wolfpack just smashed it out today on the 4th day of the boot camp. Just amazing knowledge, amazing value. Like, the amount of feedback that I've been getting over text in the group chats and everything, it's just been crazy. You lot you closed it down with the best of the best topics, and the Wolfpack just smashed it. Guys, drop some fire in the chat if you gain some value. I know I can't even see the chat myself, but drop some fire in the chat. For those of you who are asking if it's only for your team, the call tomorrow, hosted by Wally, will only be for Traders Empire. So it won't be open to the public, or it won't be open to everyone in IM. Everyone who is on that call tomorrow will only be from Traders Empire, and it will not be recorded at all. Alright guys, so for everyone who is in Traders Empire, you will get the links in your group chats. If you don't see it in your group chat, just ask your upline P1K and they will get it for you. So guys, before I wrap it up, everyone may remember that announcement I made at the start that we've actually come together and made a Telegram channel. So who wants that link? Type some 1 in the chat box if you want that link. Type some 1s. Let's see these ones coming through. I don't know if the chat is lagging for me because I'm seeing some old.
Yeah, because so many people.
Yeah. So what I'll do is I'll close off the chat box and then I'll send it through, yeah? So just bear with me for a few seconds. Let me just close this off. Close off the chat box and stuff. Yeah, so for those of you who are asking if you're part of Traders Empire, as long as you are under Shabazz Ahmed, Chairman 100, then you are a part of Traders Empire. So now that the chat box has finally calmed down, let me send in the link for the channel. Everyone, spam it, get into that channel as soon as possible, send it out to all your teams, send it out to everyone you know who's in IM, but it won't be open to everyone in public. What time EST? The call tomorrow is at 10 p.m. BST, which is 5 p.m. EST. So it's basically the same time that we've had it so far, every day so far. The chat box is still not showing for me. It's still showing some old messages, but let me just join in from my phone so I can see what the chat is saying. Bear with me for a second, guys. Have to have your as part of your surname on your Telegram, otherwise you will be removed from the group chat. I can't even open Zoom on my phone, it's crashing because of the amount of people. But everyone, what do you mean that's not fair? Like, we done this, we don't get anything out of it, but we're doing this for everyone. So the only thing that you can show is appreciation, yeah? And yeah, this, what was I gonna say? Yeah, basically to be a part of the Telegram, you have to have your IM ID as part of your surname, and if that is part of your surname, then that's the only way that you can stay part of the Telegram. Otherwise, one of the admins will remove you, and you have to have an active package to be a part of the Telegram. So can someone please tell me if the link has been dropped or not? Because I can't even see it. Okay, I guess it has been dropped because it's been sent out. Can someone from TE Sniping Prodigies just confirm if they can see the link in the chat? Yo, Mac, and I see you typing, just send it. All right, perfect. So, awesome. So guys, thank you so much for attending this call. Tomorrow is going to be the last and final day of the bootcamp. It's going to be a complete shutdown. I cannot wait for